guys, Louie here, and welcome to the weekend. All right, let's talk about silver. Let's talk about the wild moves this weekend, the shocking moves, to the downside and then back up to the upside. I'm going to get over to a chart of silver, actually just the SLV, because that is a proxy for silver, not because I'm recommending it. But here we are with the SLV for 3 months, and it trades lower than spot price by a couple dollars. But I'm just mostly going to be looking at the movements and show you what I think is driving the market. And you might feel like we've had some shockingly low moves. But if we look at a 1-year chart of SLV, all right, we can see that where we are today, all right, which is what is it, around 2150? Let me look that up real quickly. Silver is at about 2160. Okay, so, I had said several times over the last couple of months when silver was in the 24s, high 23s, I thought that was a pretty fair price. All predictions aside, all FOMO aside, all wild speculation aside, $24 was a pretty good price for silver. Why is that? Because we started the year, if you could look up here, this is SLV. I think we were probably around 26 at this spike here. But looking at where we started the year, on SLV, that was an opening price of 1879, and here we are. What are we? 1 year later. Oh, actually, I wanted to start in January. This is a 1-year look back. I guess what I wanted to look at was year to date. Okay, here we are year to date. We are lower on a year to date basis, but we are higher on a 1-year basis by, 50 cents or a dollar. So silver has been traveling in this range, and of course everybody thought this was a breakout here when we were in the 25 area, but that was not to be. Now we'll come back to, let's go back to a month, and we can see what has happened and why everyone is, really disappointed. We've had just major sell-off. Now, the thing that is driving this is perceptions of the economy. All right, there are two camps. There's the camp that thinks recession is coming, and there's the camp that thinks soft landing or no landing is coming. Silver has been acting as an industrial metal, and as I've said again many times, it's really hard for silver to catch a bid when there is perception of recession or there really is recession. There is recession in other parts of the world, in Europe to be specific, and there is perception of recession in the U.S., may or may not come, despite the stronger jobs report we had on Friday. There's been this flip-flop back between soft landing and recession. And now the other thing that's happening, and of course in a predictive recessionary environment, the industrial side of silver will not be as strong. That is the majority of the use of silver outside of investment. Industrial is what silver is used for, and people buy less stuff, whether it's a solar panel, an electric car, or anything that they put silver in these days. They buy less of that in recession, and there is plenty of evidence that the consumer is getting strapped. You only have to go to the supermarket to realize that you have less disposable income. Silver is generally used in discretionary items that you don't need to live. Now you could say, yeah, well, I need a TV. You could make the argument I need solar panels, but the reality is, in a recession, you're buying gas, you're buying groceries, you're paying rent. Silver is not on the top of your mind, and that's why everybody's been selling, probably because they need the cash and the perception that prices are headed lower. So I think that's why the downturn from the 25s to the 20s. Yes, we did touch the 20s again, and there were some great buying opportunities down there if you chose to do that. Premiums are low and have not gone up from what I've seen. So this downtrend here is perception of recession. The other thing that's happening, and what I'm going to put in here, is a proxy for the long bond. This is TBT. This is short the long bond, but it's a proxy for interest rates. Just don't even think about it more than that. Long rates have been headed up. Okay, long rates have been shooting up. Now, that could be a perception that the economy is not weak. It could also be a perception that inflation is going to get out of control. Of course, the government is doing nothing to control inflation or spending, and there have been a lot of bonds for sale that is pushing bond prices down and the long rate up. There are some people that still are in the recessionary camp but feel that stagflation is our future. Again, it depends somewhat on Washington. You could wonder, could we ever get ourselves out of a 33 trillion and rising deficit? Maybe not. And that could lead to stagflation, stagnation of the economy while interest rates and inflation are pushing higher. I'm in the camp that I think inflation will moderate over time because the economy will drag it down to some extent. Now, you also notice oil prices were shooting to the sky. That was also increasing the perception of inflation, which means generally higher rates. The Fed would stay higher for longer, perhaps even keep increasing into a recession. And you can certainly have high oil prices during recession. We've seen that before in the past. So all those factors are pushing the long rate up. And that has been pushing silver and gold down. Matter of fact, silver was dropping at a more rapid pace than gold. Gold just fell apart. It just, completely fell apart and is busting, support, or was anyway. I don't know if it recovered enough on Friday to offset that. But higher rates usually mean higher dollar, usually mean lower gold. Lower gold dampens investment demand for silver. And if you're in the stagflation camp, then you would think, well, recession and higher rates, and then, bury your silver for a year and come back later. And perhaps same thing for gold. So that is what I see. Technically, the higher rates have been pushing down metals. Fear of recession have been pushing down metals. All right, so where did we go for the week? And again, the bars, the green and red bars, are SLV price. So we started the week at flat, and we ended the week at flat with some great buying opportunities on Wednesday and Thursday if you have any cash left. I hope you guys still have some cash left. I spent all mine, as I said last week, on the Libertads. In retrospect, it was a mistake. Now, it won't be a mistake in a year or maybe even 6 months, but I wish I had had some cash free to buy some super cheap Eagles, because that's what I would probably be buying here. Premiums are low, and they're everywhere. They're throwing them at you now. The dealers have lost a fortune on those. They're probably selling them for less than they paid for them, and it's time to go out and get the quality stuff, whatever you perceive quality to be. But gold was dropping, silver was dropping even more. The gold-silver ratio, which I do do think is relevant. Broke above 84, broke above 85 when we were down in here. I don't have the GSR to show you. It got up over 87, I believe. We were in a little bit of a capitulation zone, I think. And possibly, we put in a bottom, maybe it's a short-term bottom. Everything screams 20, right? If you look at the charts and you look at the current environment, you see the stock market weakening, as I've said it would happen for some time. Everything screams $20 spot. And we may get there. Now, but let's take a look again at rates, what's happening on rates. So I said that, if you're going to want to have a turnaround in the price of silver, we've got to get a handle on these long-term rates. They are certainly shooting very high, and it is an attractive yield to lock in 5%, for 10 years. And maybe we'll kiss 5%. But there was a bit of capitulation on Friday. Now, the labor report came in stronger on Friday. Okay, it came in stronger, and rates shot up to a new high. What is it? I forget if it's a 10-year, 15-year high. So, everybody is hoping, Wall Street is hoping for a dampening in the labor market. And here we printed twice as many jobs as we were supposed to. And that shot rates higher because that screams, higher for longer by the Fed, which will keep the long end elevated. But look at how the rates reversed. That was a shock to the market and then a reversal. Now, why did silver go up this time, although rates were going up, and I believe the dollar opened really, really high. The dollar is a wrecking ball around the world. Watch the dollar milkshake guy if you want to understand that. The dollar is wrecking the world. High interest rates are wrecking the banks, and there is going to be breakage. There is going to be serious breakage. You just haven't seen it. It hasn't been announced, but there is an event coming, in my opinion, that is going to be shocking to the world, that is going to change everything. But let's just look at Friday, because that's all speculation. The rates spiked up to a new high, and then they plummeted back down. The dollar reversed. But look at what silver did. Silver ratcheted way up, which was uncharacteristic of higher rates. But what's happening here is, people are thinking maybe no recession. Maybe no recession at all. Maybe, we keep printing higher GDP, and that put the industrial fire back under silver and other commodities, except for oil. And we had a massive move in silver. We thought it was going to reverse, and it spiked right back up again. And there you go. And then rates started to drop, and that provides a little more tailwind for gold and silver, and we ended up right about the highs of the day. Now, I think if you're trying to predict, I would try to predict the long rate. I think we're getting very, very toppy here. I also took a look at oil. USO is the other thing that provides. Let's just take a look at USO add, and let's get rid of the short treasuries and open that up. Okay, oil was on fire, and they just cut the legs out from under it. All right, the one thing the Fed doesn't want, to see is higher oil prices, unless you think the Fed wants to crash the economy and wants high inflation. And there's a school of thought that thinks that, because that's the only way to get out of $33 trillion debt, and rising is to inflate it away. So that's one school of thought. I don't actually think that way, but that's valid thought. But oil was getting too high, way too high, to give the Fed flexibility to fix the next crisis. So something is going on with oil, and I tend to think this is manipulation, because we needed lower oil prices to change the narrative of higher for longer. Rates, the jobs report didn't stick with that narrative. It came in strong. So, in that case, low oil Didn't help us that much, but it's not hurting either on the long bond. So, I hope we see the oil prices stay down around here. People are still predicting $100 to $150 oil. I'm in the camp that thinks that recession is coming. That dampens demand. That brings down all prices. And I think that brings down inflation. What's going on in Washington? I thought when Speaker McCarthy was ousted, that could be a positive for silver. Let me get back to something pretty to look at rather than these charts. What'd I do? Lose it? There we go. When McCarthy was ousted, I thought, well, you know what? That could be a little bit of a fire under metals because we will clearly have a shutdown. I think probability is pretty high we will have a shutdown. They are having a hard time even finding a new speaker, and Trump is trying to help with that. He's showing some leadership there to get somebody in charge of the Republicans who look like a bunch of wild wolverines just hoping for the end of the world. But I think we're going to get a shutdown, and I think the harder right is going to make the point of, hey, Biden, you're spending too much, you're doing stupid things, and you're doing them at the wrong time. So a shutdown would make that point, and might, maybe not, probably not, bring in spending a little bit. Of course, what's the first thing they start talking about? They start talking about entitlements, cutting Social Security, guys, it's not that. It's the discretionary spending. And I know it doesn't have as big an impact, but the boondoggle projects are out of control and they are rolling through the economy like a pig through a python. And this is all the Inflation Reduction Act. There were real things in there they spent real money on. They printed real bonds to finance them. And that's where the labor strength is coming from. It's coming from government spending. Government is enormously large, getting bigger, and spending into oblivion on stuff that might fit their agenda but doesn't fit the American taxpayer's agenda. So bring it on. You wanna bring on a shutdown? Bring it on. Maybe you'll shock someone into curtailing some of the spending that they're doing. So that's what I think is going on in the markets. And would I be buying on Wednesday and Thursday? I certainly would have been, but I didn't have any cash. Could we see $20 spot? We could. Could we see the stock market? Well, we can go take a look at the stock market if you like. And what are you guys doing there? Are you fully invested? Have you stepped aside? Let's just go to SPY. All right, get an advanced chart on S&P 500. Let's take out oil. And let's just go out 1 month and let's get a large chart. And not large enough. Hold on 1 second. Oh, come on. All right, so there we are for a month with the S&P. We were hitting highs. Euphoria was back. Everybody thought, well, they thought the market was going to keep going up, obviously. There's a lot of bullish rhetoric on the market. But, the market said otherwise, not quite buying the soft landing story, more fear of recession, and high rates are not helping. All right, now we did have some capitulation a little bit here over the last couple of days. Let me get back into a 5-day chart. And there it is. So we had, definitely testing that bottom there. What was that? 4,200, 4,150. I forget what the number was. Well, here it is, right? What's the low? The low is about 42. 4,200 even. Let's call it that. Some people were calling for 4,100, but bit of capitulation there. And then we had a shock low, right? We were treading water a little bit higher. We had a shock low Friday morning, and the market said, okay, that's a safe point to buy back down at 4,200, and then we had a reflexive rally. But look at the big red bar, guys, at the end of the day. So let's see if we topped out on the charts. Yeah, not really any gaps to fill. So, I think this is a bit of a head fake. Maybe we could get back up to 4,250. No, maybe we could get back to, yeah, 4,250. Where did we end? We ended at 4,300, 42,950. And where's that top on that? Is 43,180. We could have a little more to go, but the market looks ill right here. It just looks ill, and I think we're headed for lower stock prices. I think we're headed for recession at some point. It might take another quarter for that pig to get through the python, or for more people to lose their jobs. Although the jobs report disputes that line of thinking. But what kind of jobs? Are they government jobs that are growing? Are there people working on the Inflation Reduction Act projects? New Green Deal, et cetera, et cetera. I don't know. I just, there's a little gap there around 4,400. What's the bottom on that? 43.80. There's a little gap there to fill. So you could see a bounce back in the markets, but you're here for the silver. And let's just go back to that silver bars. There's silver bars in my stack. I mean, the thing to do right now, in my opinion, is not sell. Not sell. Wait this out. Take your silver, put it in a great big box, put it somewhere safe, and stack some shit on it. All right, put it away. Don't think about it. Don't sell it unless you are in desperate need of the money, and then you're going to get a shitty price for your silver. When it gets back into the 24s, 25s, it'll be a decent price, and at some point the FOMO will return. It always returns. 10 years now. How many times have we had FOMO? Well, a lot more times than we've had a breakout to new prices, I'll tell you that. $30 is a formidable barrier in silver, and right now commodities are just languishing. I showed my friend recently, a week or two ago, a chart of nickel. All right, now if you want to know what could happen to silver, and I don't predict this, open up a nickel chart and you can see that one of the most highly used metals in the world is trading at levels that we haven't seen for a very, very long time. I mean, on the low side. So if silver takes on its industrial hat and gets crushed, we could see lower prices. But there is always a new run. It is cyclical. It is something that has to come out of the ground. It has to be refined and, then manufactured and sold and wholesaled and retailed and marketed and etc. And you don't do that for $1 over spot. The cost of mining with higher oil has also dampened the miners. Well, that's my opinion. The lax demand for silver, and lower spot price, etc., have dampened demand for miners. Miners look really cheap here. Gold and silver, they are down, 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 then down some more. And we had a bump on the last couple of days. Are we at a bottom for miners? I don't know. I really don't know. I've still got my little array, my little basket of silver and gold miners, and they've all got red for the gain or loss portrayal. So do you want to be ramping up on gold and silver miners here? That's really up to you. I just keep a small portfolio and I watch it. And, when the breakout comes, there'll be plenty of warning. You'll be able to see that, the miners are on fire again. But higher labor cost and higher oil cost to manufacture, this energy intensive metal, that's going to put a dampening effect on the miners. But then again, there aren't that many of them, and they aren't making many new mines. So at some point, this turns around. Is that going to be in a week? I don't know. Is that going to be in a month? I don't know. Is that going to be in a year? Well, I think you're getting close to how long you're probably going to have to wait until we get through whatever is coming at us. Because I think we'll see recession in the first and second quarters, then we'll see stock market, and then we'll see potentially the higher rates and whatnot, but crisis that could happen even sooner. Potentially, the Fed will act differently, debase the dollar, and we'll be off to the races for an asset that is wonderful to have in your stack. While you may feel betrayed by it at the moment, incredulous at the price moves, it is a commodity. It is not. It's not the second coming of Jesus, okay? It's a commodity. Look at it as such. And from time to time, very, very few times, okay? Like I've said before, 99 reasons for silver to go down and only like one for it to go up. And then from time to time, we get FOMO and we test that rule and then it gets shot back down. But a hell of an insurance policy when we get to that one time where they can't stop it. Same thing with gold. Take a look at that GSR and you'll know that, silver is still the buy, although now we've busted new highs up over 87. So that indicates silver has been weaker than gold. If gold continues to trend down because governments need the money, because they have to, they have to offset their losses on the dollar wrecking ball, on the treasuries they've bought that have taken a 30% haircut, they'll sell their gold too. They'll sell everything to sustain their dollar, sustain their currency, their fiat currency, because the one thing they can't have is revolution, right? So they've got to keep their currency stable, and that's why the dollar is going to see much higher highs over time until the world implodes, right? So, I don't know, maybe that was too many twists and turns for people to really appreciate, but that is the complexity of this little silver bar. And if you're mad at it right now, put it in a box and put it away. You don't have to look at it. You don't have to think about it. You don't have to sell it unless you have to sell it. And if you do have to sell it, then you probably bought too much of it. Okay, I think I'm going to wrap it there. It's a little bit of a depressing video, but I wanted to address the market and where I think we are. We're in the, ignore the price of silver and gold for a while and take a look at maybe where you went wrong, where you got too much, where you paid too high a premium. Take a look at your gold to silver ratio. Not the GSR per se, but how much physical gold do you have versus how much physical silver do you have? And ask yourself, would you rather have been heavier in gold at this point? Well, hell yeah. Gold took a very small haircut compared to silver, which is down like 25 to 20. 25% from the peak. Look at gold and you'll see why seasoned stackers, long-term stackers, often have a higher percentage of gold in their stack. It moderates the pain. But if you're hardcore, pedal to the metal, you're looking for the big hit, and you're going to trade it like a mofo. I tend to fall in that category. I recommend 50-50 gold to silver in terms of monetary value, but I don't practice it because I always see another piece of silver I want, and my gold ratio is lower than 50-50. The other thing you can do, when you have a lot of gold, is you can trade it out for more silver when spot is low and premiums are low. Not having gold, you got no moves. You just got silver and you got volatility, and you're going to live with that, right? But take a look at whether you should have had more gold in your stack and act accordingly as you move forward, as you build your pile. Okay, well, I think that's a good point to wrap it up here. Let me know what you're doing, and hopefully you had some money available to do some buying. And if you didn't, are you just going to put it away, or did you sell? Wah, wah, wah. All right, hope not. Guys, I'll see you later. Louis signing out. You guys have a wonderful weekend.